Right, so how's it going, everyone? Today, we're going to be going over how to determine your bias, explain how draw on liquidity works, and I'm gonna make it as simple as I can. I'm gonna simplify it for you guys and help you determine your bias. So, from my experience, there's a couple ways to do it, to be honest. Because now I use fair value gaps mainly to determine my bias, but I'm gonna tell you now what I used to use to determine my bias and find draw on liquidity. Uh, Firstly, you need to understand the market is fractal. What does it mean? Market frac it means fuck. Fractal market means that daily, weekly, monthly, 4 hour, 1 minute time frame doesn't mean they're all the same. If I didn't know this was a daily time frame, I wouldn't even know what time frame it is because this is this can happen on 1 minute time frame. This can happen on 3 minute time frame. This can happen on 30-second time frame. Any time frame. So understand that any time frame is fractal. Time is price is fractal. That any this can happen on any time frame. So that's what I used to use to determine bias because I used to have a lot of experience on 1 minute time frame. So then I realized that market is fractal and whatever I saw on 1 minute could happen on higher time frame. So what I mean by that, here as you can see, I called this out in the Discord around this time, like it was 4th December. You can see we're accumulating here, right? I'm gonna explain how I determine my bias and find drawn liquidity uh, after this. But this is what I used to use as a beginner, like you. Uh, you can see this is an accumulation, price accumulating here, right? You can expect some kind of manipulation from here when you see this. So you know we all know that power three. If you don't know, I explained it in the video that I have a couple weeks ago, maybe, or a couple days ago. I explained it. So when you see this, you know that you have been training this on 1 minute time frame. So you can expect the same thing on daily time frame as well. You can see this was price was accumulating, right? We were consolidating, doing nothing. You can expect manipulation from this, as we did with this candle. We manipulated all these lows and took out this swing low and we respected this bullish PDRA, right? And we bounced off from this. So what you should expect from this day? The next day is going to be bullish. Next day was not bullish, but we started we started distributing the price from this day. Thursday, went up. We broke this high. Next day, what do we expect? Going to be bullish. What's the next draw on liquidity after this? This high. This high is right here. This high was my next draw on liquidity. This is an external high. I'm gonna explain internal and external uh, lows and highs today as well. This is our external no draw on liquidity. This is our external draw on liquidity, guys. So what's internal? This is your internal liquidity. Internal sell side. Wait, fuck. Internal sell side liquidity from internal to external. External means the top of the very external price high, swing high from this moment at this moment. So this is internal sell side because this is not the range that we are trading from this range to this. This is the range that we are trading in. So this is internal liquidity. This is external sell side liquidity. So all these lows are internal in this range. All these lows are internal in this range. These highs and lows are external. Remember that. So even in this range, this is internal highs and lows. But this Not into this is external highs and lows, but this is internal. If we made in this range, this is internal lows, internal highs. This is external high, this external low in this range. Let's do it again. This is internal high, this is external high, this is external high, internal high, and internal lows. Internal lows that we took out to get our bias. I think you got the point. With this internal sell-side liquidity being taken, we form the bias to external liquidity. That's the main draw on liquidity. So what's the catch here? What's the tip? You just need to understand that if you have the experience and if you uh, realize that market is fractal and any time frame can do anything that you see on the lower time frame. I mean, higher time frame can do same things as you see on lower time frame. You will understand draw on liquidity better. But now I'm going to explain how I determine my bias, find draw on liquidity now. Mainly, in my opinion, fair value gaps tell the biggest story in the market. Fair value gaps tell the story of the market, in my opinion. And why? Uh, as you can see, like let's take, for example, let's take a look at this situation. We see on daily here we're bearish, right? We're making higher highs, higher lows, higher lows, higher lower lows, higher lows, higher lower lows. I forgot that already. So what do we see here? We see this PD array of price fair value gap gets disrespected, right? What do we expect? We expect higher prices from here. Why? Because we shouldn't disrespect this if we're going lower, right? We should expect that this one to be draw, our next draw on liquidity, then this one, then this one, of course, as we hit here, then this one, this swing high. We know market hunts liquidity and fills up imbalances. And what do we have here with this liquidity? We have fair value gap, bearish fair value gap. What price does? It respects this. It didn't disrespect it. If he did, what would our next draw on liquidity be? This high, and potentially this high would be our next draw, but it didn't. So we respect this fair value gap here. We respect it. As you can see, we take this internal liquidity from internal. We expect this low to get rated after. Then this external liquidity to be taken after this internal liquidity being grabbed. Why? As you can see, we have volume imbalance here. This is inefficiency that gets disrespected from this candle. We respect it here. When we respect it here, we still take out another internal liquidity after we respect this. So we respect this with this candle. Next draw, what's the next draw? This high, this swing high that we formed. After this candle, that we disrespect this, as you can see, bodies. Some of you might be too much of a beginners and don't know what I mean by disrespecting and respecting it. When I say in the video that price disrespects it, it means the body closure was out of the range of this. Like if you see this, this is the range, this is the inefficiency, right? This candle closed the body out of it. So it means the price disrespected it. In this situation, if you see this is the inefficiency, right? We respect it. As you can see, there's only wicks here, not the bodies. Bodies are out of here, not below this. It's above, or even if it was inside, it shouldn't be below this inefficiency. So we respect this. After this, you can expect price to be bullish to this swing high. So after we see a disrespect on this, what's our next draw on liquidity? This low. As well as when you see this fair value gap to be disrespected as well, What's your next draw? This. And EC. Uh, even we disrespect this fair value gap here. We respect this, then we disrespect it. What do we expect? This low to be get raided. I think you get the point, guys. I'm gonna go couple more a couple more I mean couple more fuck examples. Yeah, right. That's the word. So what do we see here after this? We see this fair value gap gets respected. What's our next draw? Bearish, right? We see bearish price is coming. When do we disrespect it? We disrespect it here. What's our next draw? Maybe this fair value gap is our next draw, as we did here. When we disrespect this fair value gap as well, what's our next draw? Do we see any fair value gaps? Here. And this highs and lows, this highs, this wicks is going to be is liquidity on lower time frame, like on 4 hour time frame. This is going to be a buy side liquidity resting above here. As you can see that we took out liquidity, we're on in a daily fair value gap. What do we expect? Bearish prices from here if we respect it, right? So as you can see, we came up here, we respected it. I had this called out in Discord as well. I might put a screen somewhere here while editing, maybe, that I called this out. I was bearish after this because we respect it. Then what's our next draw? Maybe next draw is a PD array or even a swing low or swing high. In PD array, what I mean in PD array, this, as you can see, there's a little fair value gap here. This is my next draw on liquidity. Then I expect price to react from it and show me what it's going to do. As you can see, price came down here. We disrespect this, but this is not much of a PD array. It's not in a discount. I expect price to come way lower in the discount if we are starting to retrace from here, because as we can see, we formed the swing high, then a big bearish candle. Then I'm always waiting for it to come down to discount this time. Then we have a maybe, I don't use order blocks on higher time frame, but that much. But you can expect price because we don't have any inefficiencies here. So as you can see, price comes down to this order block and disrespects it easily. Also, you can call this market maker sell model because we have origin consolidation. I had this called out as well in the Discord. This is called consolidation. We get into the premium array, this fair value gap. Then we started to come down and take out this equal lows here. So after that, what happens? I can do this thing on any time frame, guys. It doesn't matter. I can go lower time frame after this. There's another example, great example here. We took out this equal lows, right? What do we see now? Price kind of retracing, right? What do we expect? Price to push in here and show us any bearish prices because we are in a bearish PD array, right? We're in this fair value gap. I expect price to go lower from this. But what do we see? We see this candle. We see this candle disrespecting this fair value gap, right? So it's disrespected. I expect bullish prices from here. So this swing high to be taken. What do we see after that? We see this bearish fair value gap gets disrespected with this candle. What do I expect after that? I expect price to take out this swing high, of course. Then I expect price to go into this inefficiency once more. As you can see, we go in here, we disrespect it, and then we find support on this inversion fair value gap. So FVG, we find support here, and we push up again to this buy side. And potentially we disrespect this volume imbalance here as well. And we go to this swing high, go to this swing high. And after this swing high gets taken, what do we expect? We expect bearish prices, right? For it to continue going up. We had a bearish day here after we took out this liquidity. We had another bearish day. I expect price to go into the fair value gap again and continue going up as we did here. We went in this fair value gap. What do we expect? Price to be bullish and take out next day's previous day's highs, and then this swing high that we took, then potentially this swing high to be taken. Then what do we expect from here? We still have highs here. This is a consolidation. They should be taken, but before that we need confirmation that we're going to go up there. So what do we expect? We expect price to maybe go up, right? We're still bullish to this. Maybe you're still bullish to this. I was, to be honest. But when I saw this consolidation, when I saw this rangy price action, what do I expect? I expect price to manipulate the buyers here, manipulate everyone, take them out, and then continue going up. That's what we got. We took out this liquidity, came down. This is a accumulation phase, manipulation, and distribution as we got. So what do I expect here? We took out this liquidity here, and we respect it. We respect this PD array. So what do I expect? I expect higher prices, bullish prices. This swing high to be taken next. Or even you can take it as easy, low hanging fruit targets. Previous day high, maybe. These highs, any of these highs are liquidity on lower time frame. So I'm just explaining daily time frame now. So I expect bullish prices from here to here. Okay, let's do a quick little analysis for next week, for January as well. As you can see, we saw this fair value gap getting disrespected. I still want one more bearish candle to think that we're going to this swing low, but yeah, the idea is after this I should expect price to come down and take out this swing low. So my draw on liquidity next is this swing low, and potentially this inefficiency, all of these inefficiencies here. Yeah, and on weeklies might be better. Yeah, and all these inefficiencies here. And by the way, as I said, these fair value gaps are liquidity on lower time frame. As you can see, this is a weekly fair value gap, right? On daily time frame, this is a swing low here that we formed. This is liquidity, and there's tons of inefficiencies there that we need to feel before going up. Maybe potentially, I don't know yet. No one knows yet, in my opinion. If we from technical analysis wise. So you guys get the idea. I'll do some more analysis on lower time frame now for you. Let's do a 15-minute time frame, right? What do we see here? We see it's just hindsight. I didn't prepare for this, guys. To be honest, I'm doing it. I'm doing it with you. So what do we see here? We accumulate, right? This is an accumulation phase of the price. So it's to take out this internal liquidity. This is internal liquidity that we took. What do I expect? I expect the external price to be taken. Maybe this. You can count this as an external, or I think these are internal liquidities, but external should be this low. This low should be an external liquidity for now. So we took out this internal liquidity, right? Then what do we expect? We expect bearish prices and bearish setups to happen. How do I expect that? As you can see, before going lower, we respect this PD array. We kinda we at 1 point and 0.25 point away from this, but we still respect this bearish bullish PD array. So we didn't disrespect it fully on 30-minute time frame. It could be, yeah. Here we respect it. We respect this bullish fair value gap. So what do we expect? This is our next draw on liquidity. Same as daily time frame, guys. All the same. So after this, what do I expect? This fair value gap to get disrespected if I'm looking forward to bearish prices. So as we got here, we disrespect this bearish fair value gap, bullish fair value gap, my bad, and we inverse it. This is what I use now. I used to use the thing that I explained at the start of this video, but now I use this to determine my bias. This I love my fair value gaps, not mine. It's ICD's, but I love fair value gaps. You get the idea, guys. So we disrespect this bullish fair value gap. Then what do I expect? I expect bearish prices. This low to be taken, this low to be taken. Potentially, if we disrespect this bearish PDA raise, as we did here, we did disrespect this, and then we took out this low as well. And also we made market structure shift here. What is it? Market structure shift. We had a market structure shift. We go into this inversion fair value gap. We respect it. Then what do we expect? Bearish prices. After we disrespect this fair value gap as well. Easy, guys. So this becomes what? Inversion fair value gap. So price retraces up, finds resistance here, then goes down more to fill out this bullish PD array. Then what do I expect? We're respecting it here. Yeah, we're finding support here, but I'm waiting for this thing to get disrespected to think that we're going for this lows here. As you can see, we disrespected with this candle. So what do I expect? I expect bearish prices, right? Then what do I wait? I wait for sell setup on lower time frame, of course, but I'm gonna explain on 30-minute time frame now. What do I expect? Any internal highs to get swept to find a sell setup. I'm gonna find it on 30-minute time frame for you guys. As you can see, we took out this internal liquidity. We took this high as well. And what do I wait for? I wait for a bearish market structure shift or any entry model that you guys want. I'll use fair value gaps for now because I'm explaining it now. So what do we get here? Market structure shift that most of you guys trade. There's a market structure shift for you guys. What do we expect? We expect bearish prices to this lows to be taken. As we said, we disrespected this bullish fair value gap, this discount PD array. So what do I wait here? I would most likely be waiting for this to be disrespected as we got here, and then retracement into this, and I would took a short setup if this was 1 minute time frame. I don't trade 30-minute time frames. And beautiful one to trade on 30-minute time frame. On 1 minute time frame, there should have been a better setup, to be honest. Let's go on 5-minute maybe. Nope. Yeah, why not? But I don't think it's not the market conditions are not looking best there. Yeah. On 1 minute time frame, what do we get? We're in this zone here. We're in that zone that I had marked out. Uh, where is it? Yeah, here. Let me remove this. So we're in that zone, right? What did we do? We took out this swing high, internal liquidity. After that, we took out that. We have what do we have here? Displacement, disrespecting this bullish fair value gap. What do we expect from here? To go lower. As you can see, price comes up. We pretty much did disrespect this bearish fair value gaps, but our higher time frame bias tells us that we're bearish, right? So we still wait for more confirmations to go short here. So I would wait for this to get disrespected as we did here with this candle. We respect it here, but we're waiting for this to get disrespected because this is in discounts. So this is a discount fair value gap. So as we did, we see the disrespect on this fair value gap. I would take a short setup here, maybe here, and stop above the high. I would have my stop here and target the low. or if I have a bias that is gonna go lower, if I have a higher time frame bias, I could target more, and if I left a runner, I would have gotten more risk to reward as well. It's up to you. It's up to your trading plan. It depends how you trade, the your risk to reward, your risk management. That's up to you, not up to me. You should come up with that, not me. You need to find what you're comfortable with. So you guys get the idea. I think even if you had taken a short position from here, even if you see this bullish fair value gaps getting disrespected, it's most likely going to take out this high, but maybe you have a higher time frame bias. You saw your market structure shift. This is your setup to take. You put your stop on the high, the safest stop that you can get, and target the lows. You get a nice 1 to 4 risk to rewards. Okay, yeah, I think that's it. I don't think I did bad here. I think I explained it and explained as simply as I could. Uh, just remember, guys, that you should take your trading as simple as possible. I take trades from internal liquidity to external. As you can see, we take out this internal liquidity. We had a market structure shift. I would take this trade any day, stop above the high, and target the external liquidity that I had this. Even if I didn't target this, I had this lows and this lows here. This could potentially be an external 1 minute time frame liquidity. You guys get the idea. I You can trade only using fair value gaps, guys. I just need this. I need fair value gaps to tell me the story of the price. To determine bias, you can you can wait and have patience for price do what you're looking for. Wait for price to this particular situation. Wait fair value gaps to get respected, disrespected, and find your bias with it. That's the best advice you'll get, guys. The best advice is take trading as simple as possible. You can define your bias from only using fair value gaps. You can see this accumulation of price on any time frame. You can see my market is accumulating. So what do you expect? Manipulation, some kinds of manipulation. There's manipulation. There's a distribution. It's that simple, guys. Just take trading as simple as you can, and trust me, you're gonna make so much money with this. So I think that's it. I don't think I did a bad job explaining this, but I think yeah, you guys get the idea. Hope you enjoyed the video, guys. Join the Discord. I'm starting the mentorship uh, in 3rd January. The discount ends tomorrow. You have a 50% Christmas discount or New Year's discount, doesn't matter. So it ends tomorrow. If you guys would like me to teach you and simplify your trading, you can join the Discord and hit hit DM me, like and subscribe, and I'll see you in the next one. Bye.